Good morning, everyone. Hope you're enjoying the conference so far. I'm excited to introduce this upcoming fireside chat on how AI and blockchain are changing financial services. With us today are Umar Farooq, Head of Digital Wholesale Payments and Head of Blockchain at JPMorgan, and Alexis Zhu, Head of Growth at Scratch. Both are fellow MIT alums and pushing forward this really interesting topic. Take it away, guys.
Thanks so much, Kevin. Hi, everyone. Again, I'm Alexis Zhu, graduated MIT from 2008 and spent some time in finance and at fintech startups. So extremely excited to have this conversation today with Umar. And so welcome, Umar, and let's just jump right in. This is the MIT AI conference, so maybe we'll start there. And with artificial intelligence and machine learning, as we've heard this week, everyone's trying to do it. Everyone's trying to do it across all industries. So would love to get your take on how the big banks, the JPMorgans of the world, are using AI and machine learning today, and how has that developed over the next 10 to 20 years?
So first of all, Alexis, thank you for the time, and I appreciate being part of MIT CNC, which is one of the one of the largest clubs actually of any institution. And I think thanks, Kevin, for the introduction. Very kind of you. I think first of all, it's great to be back amongst friends at MIT. I think, frankly, I do think that going to MIT many years ago, and I'm imagining many people on this call are frankly have been there sooner than I have. But it's really been transformative, and really I think everything I do today is probably in many ways linked to what I learned at MIT, which was frankly how to learn and how to change. So coming back to the specific question, I think when you think about AI and machine learning, I think it's frankly, if you were to ask me 5 years ago or maybe even 10 years ago, I would say it would be at the fringe of banking and financial services. And today it's frankly, I don't think it could be any more core than it is right now. So and I'm sure other banks have similar numbers. I mean, at JPMorgan, we have about a fifth of our total workforce, and our workforce is somewhere close to about 250,000 people, are technology. So we have about 50,000 technologists, and we have, frankly, several thousand people who are focused on AI and machine learning across the firm. So that gives you some idea of how big and how important it is for banking, because it's not just focused on one part or two parts of banking. It actually goes through the entire life cycle. So from the point where we actually identify a client or a prospect and we start to think about what products and services to talk to them about, from there to onboarding, to frankly servicing them, to servicing their account, to protecting them from use, whether it's in a cyber sense or frankly even in a fraud sense, all the way to actually dealing with any issues they might have, is all now driven in heavy part by machine learning. I mean, I find the two terms kind of hard to disentangle between AI and machine learning because, I think, frankly, the promise of AI has been out there for a long time, but I think of most things as different degrees of machine learning. But I think it really flows through pretty much everything we do. And I know that's generally true of the financial services industry at this time.
Yeah, that's great. And you were talking a little bit about, how it flows through the entire experience, right, for your clients. And so how are you checking, the efficacy of these things, and what are the metrics that you guys are using to make sure that these models are running the way that they should be?
So first of all, let me just go into something more specific than as an example. So in my area, which is wholesale payments, so that basically means moving money across corporations, banks, governments, and so it's sort of the non-consumer movement of money, where frankly most of the money in the world moves because the amounts are quite bulky, and there's we just our bank moves about 6 trillion a night in US dollars, which is something like 1 in 5 or 1 in 6 US dollars goes through our systems every night. So you can just imagine the scale once you scale it up again amongst all the banks, then you scale it across currencies. So one of the things, for instance, one of the products that we've been working on very hard And it's taken us, frankly, a couple of years across my team using both experts in AI/ML, but also experts in actually how banking works, is thinking about what the cash flow of a firm looks like. So I know it sounds kind of weird because as consumers, we kind of know what's going to happen. I mean, you have a bank account, you sort of know you have bills coming up, et cetera, et cetera. But when you think of a firm which has hundreds of global offices, they're dealing with tons of currencies, and they have, frankly, thousands of inputs and outputs every day, they actually have a very tough time figuring out what their cash flow position is going to be next week or next month. I mean, forget next year. So it essentially becomes a gigantic machine learning problem, where if we can discern patterns in their historical flows, we can, with some degree of certainty, tell them what may happen in the future. Now, I know my AI colleagues might be offended at this, but they have all kinds of like metrics to measure like how good a model is working and how it's not working. And frankly, some of those things are way beyond my degree of expertise. But I think I always return to the sort of the core value things drive. So if you think about a client, at the end of the day, we do everything in service of a banking client. Are they actually happy with the outcome? And I know happiness is, it can be measured by the way, both qualitatively and quantitatively. I mean, as you can imagine, if we say to someone, your cash flow is going to be good or bad or struggling next month, and then they end up creating a bunch of value and trying to, basically make sure they have the right amount of money in the right places. And then lo and behold, next month that does not happen. That would be a particularly bad experience. So I think part of it is how happy they are. Part of it, frankly, comes down to, do they give us more business? Do they think of us as a preferred partner or not? So I think I mean, as a product person, I tend to rely a little bit more on those sorts of customer drivers versus, sort of patting ourselves on the back using some sort of a, mathematical measurement of how accurate the model has been.
Yeah, that makes total sense. And with these models, I mean, I think what we've seen in the earlier panel too on fintechs, we've kind of heard that a lot of these fintechs are starting to build these models on data that essentially not traditional markers, right? Like, so they're trying to underwrite not using FICO, and really trying to overcome data biases that are sometimes, unforgiving for like the thin file or as the CFPB calls, like the credit invisible population. And then, these models are trained, right, using data and human input. And so would love to hear on your side, what the big banks are doing as well, especially with your more commercial clientele, right, to really get these models right.
So, I mean, I think frankly, this is a gigantic issue. And I think people have, to some extent, until recently, not really fully realized that this can be a particularly complicated issue to solve. Obviously, on sort of my side of the house, which is the wholesale side of the house, this is a bit less obvious or a bit less problematic. But I know that my retail colleagues, who essentially, for instance, they run the models that decide how the PPP loan is going to be approved, for instance. I mean, I'm just taking like a very recent example. PPP is the federal program for people who are dealing with COVID-19 small businesses, or who should be approved for a mortgage or an auto loan or a credit card or any of these things. So I think in that area, I can tell you, I think part of it is just literally baby steps. Like they're extremely careful in what they are trying to solve, in what the data inputs are, and frankly, if there are manual overlays or weighting or any of those things needed. Because to your point, if you go with a pure machine learning model, and let's say we've all been doing something that's not ideal, then the machine is going to learn that it's not ideal, and it's just going to propagate the same outcome. So I know that in that sense, we are extremely, and again, I think it's an industry-wide thing. I don't think it's a JPMorgan specific thing. I think our retail side is extremely cognizant of the issue. And they actually have, I mean, obviously being a big firm, we love having big committees and, approvals and then reapprovals and like all kinds of stuff. So our data governance councils are particularly focused on what data is going into the model and what is it spewing out. Certain things are less, certain things are less risky, like, changing some of the credit limits and things like that. But frankly, when it comes to loan approvals, And especially when you can think about this model can propagate, a social wrong in some cases, we are extremely cautious. And frankly, in those cases, we are probably just going to go with manual processes versus machine learning models.
Yeah. And I think, you sort of basically are telling us there are still lots of really hard problems to solve, right? And to be solved. And I have to ask, because I know that there are some entrepreneurs in the audience today. So, asking for a friend, but if I were to, build an AI or machine learning based business today, and my goal is to sell it to you, to JPMorgan in 5 years, what problem do you think that I should be solving?
I think, one of the hardest problems we have is a problem of optimization. So whether, again, the same problem exists at every level. In some ways, you can imagine that, Mint or like Betterment and like some of these players who exist in the consumer space are trying to do the same thing, which is you give them all of your financial data that tell you, what, you're actually using your credit card wrong, or, you should get a different credit card, or you should be paying less for, eating out or whatever. But they're trying to help you optimize both your quote unquote capital, which is your savings, and also your cash flow. So I would say that's a problem that frankly recurs at every level, all the way to the top, where we are serving Fortune 50 companies. And if we can find a way to help them optimize capital, that's sort of the nirvana. Now, that's a very, very tough problem to solve, because, again, you can do all kinds of preparation, but then COVID comes and then, everything goes up in smoke. So I think those sorts of problems that are purely optimization problems are very important. I think the other kind of problem is data. In some ways, one of the hardest things to do is to actually standardize data. So how do you take two data sets and actually in some automated way, and AI has this promise of being able to standardize them. So let's say one side of the bank calls a client the parent, but the other side of the bank is calling the same, the sub of that same parent a client. How do you actually know that they're both talking about the same things? Again, they sound like mundane problems, but I can tell you that every financial institution is probably spending some, sort of ungodly amount of money and hours in smart people's time to try to solve these problems.
Yeah, great. I'm going to hop into one question from the audience on AI before we jump into the blockchain discussion here, which I know people are itching for us to get to. So one question here, have you come across interesting AI use cases today in wealth management or on the investment management side? And can you speak to any challenges there?
AI or blockchain?
This is for AI.
Yeah. So I think wealth management, obviously, clearly, I think it goes without saying that what people have realized is that for a vast majority of wealth management issues, people are following patterns. So if you think, anything that has patterns, you know that a machine can actually outperform a human. It's just a matter of like training and getting enough data. So especially on wealth management, there's tons and tons of new products coming out. Our bank has a product, other banks have a product. I think, you have lots of other people dabbling in it. You have retail solutions. But then at the same time, you have to have the same eye for like bias or overcorrection or overemphasis, because I think just to take a regular example, if you saw like a lot of people really, got hit pretty hard because retail investors ended up investing in some more complicated products like, oil ETFs and whatnot. They didn't really know how they work, but I'm sure they were using some retail platform that was saying, this is a pretty cool idea to go buy this. And I think you have to have that sense of responsibility. But I can tell you that wealth management and asset management in particular is rapidly going down the machine learning path in every bank.
Yeah, great. Okay, awesome. So let's switch over a little bit here to blockchain. It's been a hot topic, especially in finance and in banking. Quite frankly, like I personally am not that surprised that big banks are, focusing resources on blockchain, right? Like Merkle trees have been around since the 80s, and security, compliance, movement of money, like all these things are very core to banking, right? So I do know, though, that you, in particular in JPMorgan, has definitely generated a lot of buzz as you guys took a very proactive stance in blockchain. So, maybe taking a step back, tell us a little bit more about the types of things that you think that blockchain is particularly suited for in financial services, maybe over other industries or use cases.
So I think, first of all, I agree with. I think blockchain is one of those technologies where, frankly, there's a lot of snake oil, salespeople out there. So you have to kind of separate reality from fiction. And I think it's taken us 5+ years. I mean, about 6 years ago or 5.5 years ago was when I had hired the first person, in the blockchain space on my team. And now that team is, in excess of 100 people. So it's grown quite a bit. And I think we've literally had to do something like 50 to 60 different blockchain things to find some of the nuggets of where real value is created. And I always ask 3 questions. One is, does the problem require a blockchain? Which is, by the way, a very tough question because most problems don't in the world, financial or otherwise. The second one is, is blockchain able to solve the problem? Because even if the problem requires blockchain, there may not be performance in the blockchain system to solve it. And then I think the third one is, frankly, can you build a network? Because at the end of the day, the whole point of blockchain is to actually bring together parties that have some degree of mistrust. Now, they might not know each other at all, or they might have some partial trust. And how do you build those things? So I think the things where there are significant sort of data reconciliation type activities that go on, blockchain becomes very interesting where, when we do a large trade with another financial institution, you'd be surprised how many times the two don't agree actually after the fact, where we probably read the price at this point and then they read the price 5 milliseconds later and then our prices are slightly off. And as crazy as that sounds, but there's a lot of people that spend a lot of time trying to make sure that the two things connect. I think that's one. I think the second one, which is probably more recent and more interesting from my point of view, is the ability to tokenize assets, put them on the blockchain, and then actually be able to program the blockchain via smart contracts. Now, they're not very smart, to be very honest. I mean, they're just literally pieces of code. But the ability to put smart contracts, and you can do stuff where, frankly, your money does things which it can't do today. So it kind of monitors itself. You can program the money. One of the big issues, obviously, across the world is this issue of money laundering, or terrorist financing, and all these things. And we spend tons and tons. The industry spends billions of dollars trying to ensure that we know who is a quote unquote good guy versus a bad guy. But you could think of a distributed identity mechanism where the money is told, hey, only go to Alexis if Alexis has this certificate from like one of these 10 institutions. And all of a sudden, the token, I just cannot send you the token if you don't have the certificate. So you can take these problems and embed them in the distributed ledger themselves. And those are the sort of areas where we are frankly spending most of our effort.
Yeah, lots of interesting problems there. And also with that example too, with collateral management and just being able to understand, right, and maybe in securitizations and tons of fun things that you can start to do on that side. So maybe, a good segue is the challenges. And I think you kind of laid it out as in like, what's the problem? Is this even a problem for blockchain, or is there a better solution elsewhere? But what really needs to happen, maybe from the technology side or maybe from the adoption side, for financial services to really kind of be like, what, this is every single problem that we look at, we're going to also put a blockchain lens to it.
I think there's a couple of things. One is, I think right now you're living in a mechanism where the different ledger protocols don't really play nice with each other. So, and there's a bunch of them. So, we build everything on Quorum, which is our own derivative of Enterprise Ethereum. There's Besu, there's Corda, there's IBM's Hyperledger Fabric, which now is Hyperledgers, but was started at IBM. And then there's a bunch of others. So if you're a financial institution, you're like, which one should I bet on? Because what if it doesn't succeed? I think we are in a bit of a unique position because we built our own protocol, but for most, they don't want to really bet big on one if it turns out that 3 years later you have to swap it out for something else. So I think that's holding us back. I do think the performance, frankly, is not there in terms of especially retail type transactions. So I think if you think about retail, like Visa or MasterCard's networks can process stuff at extremely high speed and extremely low cost on a per transaction basis. So it becomes harder to replace that with blockchain. And then there's just like human issues. Like, everyone keeps jumping up and down about trade finance because it's a hugely manual process. You have people sitting in like ports, like checking off like paper documents and stamping them, etc. But I think what people don't realize is that that's where adoption comes in. You can put blockchain on it, but until that human being who's sitting in the port can have a computer, actually knows how to use one to begin with, blockchain is not particularly helpful. So I think those are sorts of things like the interoperability, the technology getting faster, higher throughput, which is going to change things. And I think that then you'll start seeing like people betting more. And I think we're almost at the tipping point, frankly. We are doing a lot more with it. Our partners are doing a lot more with it. So I have a feeling we'll get there. But the core fragmentation does slow us down a bit.
Yeah, needs to have some universal rails, right, built for folks. So maybe even looking ahead past AI and past blockchain, I feel like session on buzzwords here, but are there other, more nascent technologies or maybe systems, borrowed from other industries that could have just as great or a very significant role in banking in the future?
I don't think it's nascent, but I think IoT is going to have a huge impact when we really figure out how to connect it together. So, when we really get to the point where your refrigerator can actually buy milk for itself, I think that'd be pretty cool. And then obviously for it to buy milk for itself, it needs to have a wallet and we need to give it some money and, all those sorts of things.
I'm ready for that, by the way. I'm ready right now. I'm ready for that technology.
And then we have, again, we do wacky things, but for instance, why can't cars pay other cars to get out of their way? If they really want to go fast or something. So there's all these use cases in the IoT space that, we've been dabbling with or touching. And then there's obviously like the really wacky stuff like quantum computing, which, I'll get in trouble because there's always like some people who are huge fans of it. But, I was in an unnamed, very large quantum computing lab and it looked like a computer from the 1940s. So I'm sure one day it'll revolutionize how we think about, trading and how we think about analyzing gigantic amounts of data very quickly. But I think that's a long way away. So, we have a couple of people who look at quantum, but frankly, despite the fact that I don't consider myself to be very smart, but not that dumb either. Like I literally sat through a couple of hours and I had no idea what they were talking about. So, I use the realm of like, unless you can understand what's going on, don't try it too hard because you'll get in trouble later on. So
very good. Great. So we've got a few other questions here. Here's one around blockchain. The question is, what do you think about China's efforts to push blockchain?
So I think one is China it's a bit unclear what exactly China is doing in terms of the tech part of it. They're obviously very gung-ho on blockchain. They've launched DECP, which is their version of a digital currency, but it seems to be more geared towards making sure that they have a third leg versus Alipay and WeChat versus, some sort of a gigantic play in this space. And also the tech specs are a bit unclear, so it's kind of hard to comment. But it does seem like they're quite gung-ho on blockchain. I'm all for it because obviously, it's good for my team, but it's a bit early to tell how much of an impact they're going to have at a global level.
Yeah. Great. And here is another one on AI. So the question is, Carlos from FinHabits talked earlier today about financial literacy and inclusion for Latinx consumers. What is the bank doing? What is JPM doing from an AI or data perspective on inclusion?
So I think, as I said, one of the big efforts is to ensure that everything we are doing does not actually impact the quote unquote inclusion agenda. So if we think that something is going to generate outcomes that will be counter to our inclusion agenda, we will literally not use tech there. We would still probably stick with manual processes. I think then there's a literacy, et cetera, point of view. We basically, we have very significant programs for recruiting in younger talent, both from, from classes which frankly have not been in that case, in that sort of space, and putting them in those groups. And then I think finally we are quite close partners with lots of academic institutions, again, along the same lines, because it's not so much just building an AI solution that ensures inclusion. We also want to make sure those teams actually have people who, kind of propagate that.
Yeah, great answer. So unfortunately, we won't be able to go through all the questions. Quite a number of them have popped up, but thank you so much, Umar, for your time today. I really enjoyed our conversation.
No, thank you.
Thanks for your insight.
No, thank you, and thanks for MIT CNC. I mean, I really appreciate everyone there. Thank you.
Of course, and thank you both for the time and all the perspectives you shared on these exciting technologies. For the audience, we'll be continuing the conference with our next session on Can the Economy Handle AI in a couple minutes, so please follow the link below.